Hi everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodity ETFs that I follow. If you guys need any help with anything, check out finding-value.com. We do have a discount going on called Holidays. In the description link below if you'd like to see what that discount is. So let's dive in here. I'll give you my financial opinions of what I'm seeing in the markets, and maybe we can kind of discern what's to come next based off of the charts. Again, I don't play the short-term market movements. I'm a long-term investor, but people wanted me to do this, so I'm going to continue to do it and see what's going on in the short term. So here we go. Let's dive in. So we've got the DXY. We are bouncing off that long-term support line that I drew many long time ago. I drew this across based off all these resistance support levels. As you touch support resistance more and more, that support resistance becomes greater and greater. And we're right at a very strong support level. So we're obviously getting a bounce in the DXY. Now we're going to have to see, well, how strong is this bounce going to be? If we see contracting candlesticks, where it comes up and then you get a wick at the top, something like that. I'm just making this up. You come up, it looks like it's going to roll back over, and it may not be that extreme. It may only be a couple of days like this, and then it rolls back over. So we're wanting to see what the bounce is off this support level in the short term. The momentum is still to the downside, but we have hit a support level and it is expected to get a little bit of a bounce where you get these support levels. Yields, generally the dollar moves lower with yields moving lower. So we don't have to move necessarily lower. We could go sideways for a while on this support level for a period of time. It doesn't have to go lower. So that's what we're trying to discern is, are we going to go lower or are we going to go sideways, or is this a bounce where it sends us to the upside? I am not in the upside camp by any means. I think we are probably going to go sideways as the most likely case, and we'll see where we go after that. The 2-year yield, it is also bouncing, but you can see there's a definite breakdown in terms of the candlesticks. And what you're going to see, and if we were to kind of go on this side of it, you're going to see large green candlesticks and small red candlesticks all in this move higher there. That is what we're seeing. And then when you see a top, what you're going to see is you're going to start to see larger selling pressure days, big down days, and smaller up days. It started here, and then we got larger, big red candlesticks all through here. And that is a signal for a potential reversal. It means people are selling or buying bonds in this case. It'd be buying bonds, slowing down the interest rate. We came into a channel, and then we've broken out of this kind of channel up here. And you can look at the candlesticks where they are big selling pressure candlesticks all through there. The two there, the one here, a couple there, and this one here. People are buying bonds dramatically. So what I think it will occur is we'll see a sideways to slightly higher action, and then probably a rollover with more increased selling pressure over time. When you look at the big picture view, this could fall down a good ways, somewhere in the 2%, maybe even 1.5% range on the 2-year. What does that exactly mean? The way that I would interpret it would be we could see a potential slowdown in the market. That's the way that I see it. The 10-year yield, it was sideways today, but again, I think we have good downside momentum, and we could easily see 3 to 3.5% interest rates in the relative short term. And then the 10-year was down some degree. It's down 0.62%, and the momentum is continuing that move to the downside on the 30-year. You can see how powerful it is on the weekly candlesticks, that move that we experienced this past week. TYX TNX ratio. Now this is an interesting setup. We've got the yield curve still inverting. So we developed this pattern here. We squeezed up, we broke down, did a retest. And as weird as this sounds, I think we're going to go and invert further on the 30-year to 10-year. What does that mean? Well, it means that we could potentially go lower in the short term for a period of time. It could mean that the long end of the curve could go down more than the middle to short end of the curve. But that's the 30-year 10. We can also look at the 2 and 10, and we'll look at that one here shortly. Bond prices were basically flat on the long end. The 20-year was flat, but the momentum is definitely to the upside. So what we're getting is people and or the Federal Reserve or someone is buying bonds in the market that has reversed this market to hold yields lower. That's the big candlestick here that we're seeing. And it blew through that long-term resistance support level that we got. So we came in at that time, hit support here, and we're bouncing back off that support level. The 2 and 10, we are coming back, as weird as this is, and trying to break to the upside. And we'll see if this holds. But the curve is still inverted, and we are inverting further with this candlestick today. And we'll see if that sticks next week. Sometimes you get a false breakout where it comes up, reverses, then comes back down. That would be a slingshot to the downside. We have to wait and see what that looks like. We've got gold. Gold doesn't like the yield curve inversion, and it also doesn't like the stronger dollar that we received today of 0.67%. As weird as this sounds, it looks like we could go lower in the short term. We've got a bearish candlestick here and another bearish candlestick today that showed up, where we could see further downside in the short term for gold. Let me make this a little bit bigger, guys. There we go. And that's the candlestick that I'm looking at, the bearish engulfing. Silver also at resistance. We had the potential false breakout, and we're back to that resistance line. And we could see sideways to maybe slightly lower action in the short term with this bearish piercing candlestick that we received today. And with the bearish candlestick in gold, we could go sideways or slightly lower in the short term, is my guess. Platinum's also mimicking that, but doesn't have a reversal candlestick. This one still looks good, and we are still sitting on top of, well, we're going against a lot of resistance in this area here. We've got a lot of selling and buying pressure all through this area, which acts as support and resistance. It gets stuck in the mud, so to speak, with all of this buying and selling pressure. It still looks good to go higher, though, because we've got a broken downtrend line. We have a false breakout, which if the bears were going to push this, they were going to do it here, but they didn't. So it makes me think that we've got good upside potential in platinum still with the down day today. And then palladium, definitely bucking the trend here, up 5.5% and up $61.5 today. We back out. In my opinion, we've got a base pattern here, another basing pattern here, and we just go from level to level, breakout, retest, go all the way up. And this is a return move back to that breakout for palladium. We have a falling wedge, and it did it basically in 3 humps here. That is your consolidation downward falling wedge. And we went into a very big, large, bullish candlestick, which in fact, I think we're going to go sideways to higher for this basing pattern that's sitting on top of that previous base that I was talking about. So I think that this is actually a pretty good spot to be looking at palladium. For the members, I've been talking about palladium here, and this being a potential false breakout. And here we are moving higher, and we did take advantage of this bottom, in my opinion. Looking at XAU to gold ratio, we are continuing to move higher, even though gold is lower today. And what do we see here? Big bullish engulfing on the weekly candlestick. That is, in my opinion, bullish. We can also see if we kind of back out, and why I drew this line here is because a lot of the times what you get when you get these consolidations, it'll consolidate and they get these big humps. Here's a hump here, here's a hump here, and then we've got another hump here. Is that a consolidation where you get that 3-hump consolidation? I'm not exactly sure. I'm kind of stretching it there. But you usually get good support right at this level where we're at. And we've got a bullish engulfing on the weekly that looks good to go higher. So in the short term, I think gold could pull back. I think yields could go higher for a period of time. And then I think they're going to roll over and fall. And that's what's going to lead this to the promised land. So that is what I see put in place by gold and silver mining companies. And this is definitely the spot I would be looking. Gold and silver and or the precious metals in the physical sense. The CRB index looks like we're getting some support where we're at. Big candlestick coming in Friday here, up 2.7%. Crude was up, and I think some other commodities were up, but that looks good. That is a good sign where we could potentially try to reverse. I like seeing big, powerful moves in a single day. I call it the green army. The green army is an indication of a potential reversal. You can also see that we came back to support. So again, a lot of the times when you break these patterns, they break out, and then you do a return move, and then you break to the upside. We are doing that return move right now, and I think we are getting close to hopefully the finale of that return move. CRB index versus the S&P 500. We're in this pattern here. To me, it looks like it's trying to reverse. We are at a very low level. This is the fractal of the S&P, CRB to S&P ratio overlaid on top of this, which is actually a pretty good comparison. We've got a nice big green candlestick that showed up with very large outperformance of the CRB index versus the S&P 500. If I were to guess, I think we are trying to put in a bottom, and I think we are eventually going to work our way up in a massive factor, because what this is indicating, and this is the overlay of that fractal on top of it, looks pretty dang similar, guys. And I don't know if you can see this. We can zoom in. You can see that it even had this like sideways action here, just like it had sideways action here. So we are super early in this commodity bull market. And I think very soon at some point, we could very well rip it. Now, I don't think that this is the necessary time frame. It's not projecting the time frame necessarily, but it is projecting what could happen through the cycle, like the fractal movements. So that's what it could potentially be. Maybe we end the bull market 2031, and this could very well go all the way up back up to this peak. But that's kind of what my best guess is overlaying the fractal, which is this fractal overlaid on this and sized appropriate. GDX slightly lower with the selling pressure in gold today, but it still looks good. We've got the big green candlesticks and the small red candlesticks. That's the trait that I generally see when things want to move higher. So that looks good. GDXJ's got the same thing. We're still above support. Everything is looking A-okay for a potential move to the upside. There could be further sideways action, but again, we've got big bullish engulfing, small selling pressure. It looks good for a move higher. Same with SILJ, same thing. Big bullish engulfings, small selling pressure right at resistance that we're trying to break through. So I'm going to remain positive on the gold and silver sector. Crude oil, it does look like we're trying to put in some sort of bottom. We'll see what occurs here over time. We're up against a very long-term support level. It also has the same looking fractal like the previous cycle. If I were to kind of draw over this, it's basically a move up, a move lower, a move like that, and then it usually rips. I've seen this pattern many, many times at the beginning of the commodity bull cycles across many, many charts. Not just one chart, 50 to 100 charts. I mean, it's all over the place. Is this the same way that humans are acting and interacting with each other with herd mentality at the beginning of this bull market like the other ones? I would say most likely yes. I think we're probably trying to put in a bottom here. This is probably a good time to be looking at potential investments, and I will share my favorites with those that are in the community. TTF, natural gas, continuing to move lower, and that looks like it could still continue with that momentum. I don't see a reversal candlestick yet. And then looking at it from a longer term perspective, your basing patterns here, we tried coming up, but we did not get favorable weather across the globe. Natural gas in America up 3% today. We are at a support region, but the momentum is still to the downside. Again, when you see these things, you can see the small green candlesticks. This could still continue to move a little bit lower in the short term until this type of action is reversed. And I don't see it reversing yet. We may bounce, we may go sideways or slightly lower in the short term. XOP, yeah, you know me. This doesn't look as bad as some of the actual commodities like natural gas. This looks like it's hanging in there. It's just waiting for the right conditions for crude oil to take off, and I think this will take off with it. I think we've got a lot more upside potential in this left. I think the oil and gas investors know that, and the pattern, the herd, is holding it on this, we'll call it the right-hand shoulder. This would be the right-hand shoulder where that S is located. So I think we're holding on. We've got good green candlesticks here, not much selling pressure today. We'll see what next week's bring us, but I think we have the possibility of heading higher if crude allows us to move on up. OIH also getting a small selling pressure day. I like this type of reversal. If you look at my circle here, look at all the red candlesticks and the small green candlesticks. Big selling pressure, fighting its way back up. Big selling pressure, fighting its way back up. Well, we reversed that. We've got big green candlesticks, small selling pressure. I think the sellers are tired, and this is reversing to the upside. We've got Sprott Physical Uranium Trust. It is up 0.6%. Again, I can see the big green candlestick, small selling pressure. It looks like we could still continue to the upside for the Sprott Physical Uranium Trust. So it's still looking all right. But I will say this thing has been on a tear. Look at this thing just continuing to go up. What we're looking for is the size of the movements to contract, which we are seeing. So you can kind of draw this up like this, and we could see a potential move lower at some point if we get a large reversal candlestick. I know some people will be like, well, is the bull market done? No, that's not what I'm saying. We just ripped out of this pattern here. It's due for a pullback, guys. I mean, this has been ripping. We could get a pullback before moving on up again. So I'm not saying it will for surely get a pullback. I'm not saying that the pullback will end anything, but I am seeing evidence of a potential shrinking or a squeezing of a potential turning point, which could occur. But this also could be an ultra bullish signal where we break to the upside, which means it's even more bullish than what most people think. Because if you get a squeeze to the upside like this, and it breaks to the upside, you could get a very massive, almost like a blow-off move. And that could last for a good long time. So let's watch it together. We'll see what it is. I'm not predicting anything here. I'm just telling you we are getting a little bit of a squeeze going on. And we'll see if this turns lower or if it's going to be rocket fuel to the upside. And I don't know which one it's necessarily going to be. URA getting a little bit of selling pressure. This could be slightly lower to sideways. It is a bearish engulfing pattern, which this candlestick engulfs the one before it. That's generally a reversal candlestick. What that means, if you were to look at it in the short term, is just means that you basically, if I were to draw something in here, I don't know why it's not drawn here. I'll do this. You draw it in there. It's just a trend line break. That's all it is. It's a trend line that we've broken to the upside in the very short term. In the short term, anything can happen. And I think we could go sideways to slightly lower in URA just in the short term. Don't be mad. Don't be uh, sad that I'm saying this, but we could get a little bit of a sideways to slightly lower move. This one's still holding on to support for URNM. It's still hanging in there. And URNJ, we're getting a little bit more selling pressure there. Maybe we've got a little bit of a pullback before a move on higher in the short term. This is also another bearish engulfing here. Generally, it goes sideways to lower, and we'll see what the buying pressure response will be for next week. TAN up. This thing is ripped on higher. Again, we're at that resistance support level, but it looks good to go higher. That looks pretty good. COPX sideways day to day. But again, that looks good to go higher. We've got big fat green army, small selling pressure. This is a huge engulfing that's engulfing everything before it. That's a very bullish candlestick. Yeah, we could turn back like that, whatever it is. I don't know the future, but this looks pretty strong. Bullish engulfing there and there. Broken down trend line here. That looks good to go higher over the longer term. Lithium down a little bit. Another kind of bloody nose is what I call that. It's a continuation pattern to the upside. Still looks good. REMX, bloody nose. Continuation pattern to the upside. Still looks good. We're at resistance going across here. So that's what we're trying to break. Lithium, I think, is doing the same thing. We're at resistance across that we're trying to break. And then you can kind of draw that maybe like that. So we'll see if we can break out of this. REMX, oh, sorry, I already went over that. SPX. Now, what's going to happen here? I don't know. We're at resistance. You can see those little candlesticks. They shrunk on down. Buyers equal sellers. And you guys, I'm not convinced that this is just going to rip to the upside. There's some people that think that. It very well might. I'm not saying it can't. But I am skeptical. And the reason I'm skeptical is, why is Powell lowering rates? He's lowering rates probably because he sees a problem in the market. And if there's a problem in the market and he's lowering rates, that's generally reactionary, which means that there could be a problem in the market. Now, I don't know if this is going to peak out here at the previous high and it's a double top where we had lower. This kind of looks like a Batman pattern to me, where you got little Batman here. It could be. I'm not saying it is, but I'm giving you guys options and things to think about. And we'll have to monitor this to see what happens over the next few trading weeks. We're also seeing this in the NASDAQ. We can see a contraction in the candlesticks. This momentum is hitting resistance. It's hitting selling pressure. So again, is this going to be a double top with the Batman pattern here that is forming? What does that mean? It means that we could potentially have a slowdown in the market. And I know some people, they look at potential numbers, they look at things in the market. They'll be like, unemployment's low, all that other stuff. I'm just using yields as my guide. And maybe the uninversion of the yield curve doesn't come, and maybe this continues higher. I don't know, but that's just, I'm giving you a potential option, and we're coming to that resistance line that's coming up here. So we need to start looking for that potential turn if it's going to turn. KRE down 1.6%, but this thing's been on fire. I do think we'll probably head back to this support level. It is a bearish engulfing, and we'll probably do a retest or just fill this gap potentially. So either here or all the way back before heading higher. Because we've broken, this is a double bottom. And we've broken out. And a lot of the times what you'll see is a move like this lower in the short term. All of the big commodities, like the sectors, they all have these big double bottoms. This is just playing on a shorter term time frame. Notice the big green candlesticks, the small red candlesticks. It all looks good. Emerging markets down a little bit today with that stronger dollar. But again, I think we're heading higher. The dollar could be stronger in the short term, but I think it will potentially top out and then roll back over. And then this thing will be lighter fluid for this to just rip. XHB down a little bit today, but again, it is what? A bloody nose. Big green candlestick, small selling pressure. We hop on top of all this as we go. It's a stair-stepping pattern. So that looks really good. We're at all-time highs. We basically, if I were to, let me put on logarithmic. No, it's not going to help. What I see here, if I were to, I'm just going to draw this candle, crayon-wise. It looks like this. All right, we squeezed on up and we're breaking to the upside. This could carry the S&P 500 higher. It's possible. The only thing I'll say is the home builders with lower rates will create monetary expansion. There'll be more loans in the system, but that loaning in the system won't hit for a while. We do have fiscal spending that's going on that is very high, but monetary and fiscal spending on top of each other is going to be inflationary. And we'll have to see kind of how this all plays out in the market. Move down a little bit, but it's not a reversal candlestick. We're at resistance, and we'll probably try to punch through at some point. We've got a bullish engulfing here, here, and the green army has showed up. All great big green candlesticks, small red candlesticks, that generally works its way higher. I also think that copper is looking good. Now, some people say Dr. Copper. You know, when supply is stable, I think copper gives really good signals. Demand outstrips supply, then supply has to come online, and that's the economy growing. But I think we're hitting supply side problems. Does copper still have that predictive measure of economic growth if you have a supply problem? I don't know. I would say it probably doesn't anymore. But supply is definitely constrained at the current time. We've got the green army. There is some selling pressure still in this. It's not completely gone, but I still think this will work its way on higher, given the trend line break and the pattern that we are seeing today, until that reverses, if it does reverse. Iron ore, it is selling off a little bit. It's been on a tear, though. Look at this, guys, just ripping, ripping, ripping. We could see a little bit of a pullback in iron ore in the short term. But overall, I still think this is going to grind on higher on the longer term basis. Aluminum still ripping up today, 1.36. We're back within the pattern. And what this could be is a false breakout to the downside where people get short, and then they rip it to the upside because shorts are getting squeezed, the big green candlesticks. Thought this is probably a false breakout, and we are going to see this rip to the upside is my guess. And as we go up, we are hitting some resistance along the way. And I think eventually this is going to go to a land far, far higher, way up there, way, way, way up there. You can see a fractal that I overlaid over this. And we are going to go to a land that is way higher for aluminum, in my opinion. Baltic Dry Index, we are slightly lower today, and we have a reversal candlestick here. Sorry, there it is. That's your bearish piercing. We come on down. It wasn't huge selling pressure. We'll probably lean out and then work our way back up again. That is my guess. The projected move is all the way up here, and that doesn't mean it has to stop at that point. We've got, oh, it looks like Bitcoin. I don't know why it's not coming up. Ethereum's down lower today. And this is putting in another bearish engulfing pattern. So I do think this could head lower in the short term. We have one here, and now we've got one here, which is basically rolling over. So I do think this could go to the downside in the short term. Does that mean that we are going to get a reversal candlestick and head lower? Not necessarily. We very well could put in a pattern that looks something like that, where we consolidate and then break to the upside. So let's just be patient with it. Let's see what it does. Let's see the selling pressure and follow through moves over the next few trading days to see how strong the selling pressure really is. So that's what I've got for today, guys. Lots of info there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. If you like this type of analysis, that is some of the things that we use to time our purchases. I also overlay a bunch of other things that I look for in alignment. Ratios being cheap, sectors being cheap, and also where we're at in the business cycle that I'm describing with yield curve inversion and uninversion. So, but that's what I've got for today. Hope you guys enjoyed it. We'll catch you next time. This is Finding Value.